Thanks so much for joining us, sir. So you've raised your guidance. Are you not concerned about austerity measures in Europe and a slowing global economy?
We're cautiously optimistic about the second half of the year. We have seen as yet no slowdown in the activity for our business in any of the regions in the world, and so we felt confident enough to raise our guidance today from the previous level.
Now tell us about your results. You guys missed expectations just slightly on your net income for the quarter. What was the biggest challenge during the quarter?
Well, I think the key figure to focus on is the operating income figure, and there we almost doubled our operating income, and we were very pleased with that result. I think net income continues to be influenced by the last one-time non-recurring charges. We sold our domestic express business in France, and so we had the charges for that in the second quarter. The good news is that should be the last major quarter of restructuring expense. That's pretty much behind us from a P&L standpoint. And now we look forward to the future and optimizing the portfolio that we have.
Now, as you finish exiting these businesses and cleaning up your portfolio, do you have a war chest for further acquisitions?
Well, I think the question is there any need for significant acquisitions from a strategic point of view? I think the answer to that is really no. We'll do some add-on and complementary smaller acquisitions. But our balance sheet, on the other hand, is in great shape. We have over $500 million of net liquidity on the balance sheet on June 30, and so we're very pleased with our balance sheet position. But anyway, no big acquisitions planned.
All right, let's talk about your mail business, because that's been slowing. That's been a real challenge for you guys. You've been cutting costs. Are you done cutting costs? What's your target on cost savings for this division?
Well, I think we've been very successful cutting costs, and we're by no means done with that. I think it's a continuous challenge for that business when you have the top line declining at around 3% per year. I think you have to look continuously for ways to improve efficiency and reduce costs, and I think we've been quite successful at doing that. Our net income, or our operating income for the division, was up over 40% for Q2, so we're very pleased with what we've been able to achieve.
Now, you're expanding, spending more money in Asia. Tell us about that. Is that where growth is going to come from for you guys?
Well, we're definitely seeing the fastest growth in Asia, followed close behind by other emerging markets like Latin America and the Middle East. Certainly Asia is a huge market. It's a focus for us. It's where we have a strength in all of our DHL divisions, and it will continue to be a major focus for us in the future.
Okay.
And that goes for our investment as well.
Lawrence Rosen, CFO of Deutsche Post, we thank you very much for joining us there from Bonn.